Thank you all for joining us this evening. We'll just do a quick audio and visual check. Also, if you guys can rewind the stream if we have the DVR going on, just give us a thumbs up in the chat and we will get started here momentarily. Again, thank you all for joining and welcome to Midtown Manhattan. Two walks and Wall Street. Today is February 22nd, 2024. It is about 9:16 p.m. Eastern Time here live from New York City. I want to thank all of you for joining us tonight again on the live stream. We are reporting live from Midtown East, pretty much Billionaires Row. This is East 56th Street and Madison Avenue. This is the atrium right in front of us, but right here is the Trump Tower. So we're gonna be walking around Midtown tonight. I just stepped out of the office. It was a pretty busy day. So we're gonna be doing the usual route here on the stream. So we'll go ahead and dive right into it and start to talk about the equity market. Again, breaking news, historic news on Wall Street today. The S&P 500 yet again hitting a new all-time record high. The S&P cash market closed up about 105 points today, or about 2% on the day. Wow, closing at 5,087.02 cents. Can't forget the 2 cents. Now, the vast majority of that growth today, or I should say this rip-roaring rally on Wall Street, which propelled the S&P 500 to new all-time record highs, was majority, I would say, due to NVIDIA. That's correct. Ticker symbol NVDA. NVIDIA was up 111 points today. Absolutely insane. Now, for some context here, the 50-day moving average on NVIDIA is at $585. Okay, we are currently trading at $785. Again, the stock was up 110 points today, or just shy of 17% on the day. Now, this comes off the back of a rip-your-face-off, unbelievably strong earnings report that NVIDIA reported yesterday. Now, if you joined the live stream, we did a deep dive into the earnings report. NVIDIA posted revenue growth of 265%, obviously due to the booming AI business. In terms of EPS, or earnings per share, Wall Street was expecting about $4.64 worth of earnings per share, or EPS. NVIDIA knocking it out of the park, coming in at $5.16 on the bottom line. Now, revenue growth also blew it out of the water. Wall Street was expecting about $20.62 billion in revenue, beat by about $2 billion, $22.10 billion. It was unbelievable. They also guided significantly higher. Okay, and as we review and as we talk about, right, we talk about this concept a lot called true market leader, or TML. And as, again, not to sound like a broken record, but this is important to review, as a market transitions from a bear market to a bull market, usually the stocks or the companies that are up and out first, okay, breaking 52-week highs into new all-time record highs, usually those stocks that are first to break out are your true market leaders. And if we work backwards, they have a very specific set of characteristics as to why these companies perform so well. Now, in terms of net income, right, NVIDIA brought in $12.29 billion of net income. That's profitability. That wasn't for the year, okay? That wasn't over the last 2 years. That was just this quarter, okay? For 3 months, NVIDIA brought in $12.29 billion. To put that into context, profitability was up 769% versus last year of about $1.41 billion. So again, there's a reason why stocks are expensive, and there's reasons why stocks are cheap. And if you could kind of take a look behind the desk here, as you can see, this is a chart of NVIDIA. This was really the first one to rock up and out in the new all-time record highs and continue to run even now. This is your liquid leader for this bull market. NVIDIA makes up about 4.5% of the S&P 500. I wouldn't be surprised over the coming days and weeks it continues to make up even more. But this stock is extremely extended. So we'll talk more about that today. But again, S&P 500 hitting brand new all-time record highs today. But there is some bigger news. Guys, I think there is much bigger news that we need to talk about and we need to review today on the live stream, and that is over in Asia, specifically in Japan. Now, this is yet another thing that we've been covering for a long time on the channel, a very long time, and that is the Japanese stock market. Let me pull up the Japanese equity indices for you guys. Japan, the Nikkei 225 index, hit a new all-time record high yesterday and today. And the last time Japan traded at a all-time record high was way before I was even alive on this earth, okay? It was the year 1989. So I want to take you behind the desk here yet again, and I promise we'll get started. This, to me, is the most important, okay? More important than the U.S. equity market, more important than anything we talk about. It is Japan, okay? Japan has been building out this massive cup base and just cracked new all-time record highs today. This is something we've been watching over the past year, right? As Japan has been reaching these new all-time record highs, I think Japan is going to do really well as countries, nation states, and companies diversify away from China. I think you're going to enter a new golden age in Japan, and it's go time. It is go time. The measured move on that is significantly higher. Again, this is just sort of conversations we're talking about. This isn't any type of financial advice, but this is something we need to be paying attention to. When you have India rocking, when you have Japan rocking, and when you have a lackluster, I should say, performance in Chinese equities, this is where the money is flowing. The market is telling us that, and that's what I'm telling you too. All right, guys, last quick announcement, and then we'll get started here. We did send out our free investing newsletter last Thursday. Okay, so for those of you who don't know, and if you're new to the live stream, every other Thursday, right as the market closes, we send out our free investing newsletter called Behind the Street. If you go ahead and scan the QR code on your screen and punch in your email, it'll bring you to our latest issue of Behind the Street, where we analyzed, not only a historical view of the 2008 financial crisis, the 1929 stock market crash, debunking some of the similarities that many equity analysts on Wall Street are comparing to today's market. We also talked about some of the true market leaders such as NVIDIA, Palo Alto, Supermicro Computer, talking about how they are extremely extended. They need to come down. They will come down over time, and hopefully a lot of that money rolls back over into some of the smaller caps, Russell 2000 micro caps and the like. So if you want to stay up to date on the financial markets, everything that's happening both stateside here in the United States, emerging markets, fixed income, all that good stuff, go ahead and join us over at the Behind the Street newsletter. Scan the QR code on your screen, punch in your email, and let's kick off the stream here in Midtown Manhattan. Thanks so much for joining. All right, guys, let's roll, let's rock, however we want to call that. Apologies for the longer than normal intro. I think it's very important. A lot of interesting things are happening in the market that we need to be paying attention to as traders and portfolio managers here. So let me go ahead and get the QR code off the screen. And we will get started. Let's see who we have in the chat. I see L the Original. Thanks so much for joining us. Patrice 2020. Thank you. Stan is here. Sunshine After Rain. Jimmy Boyles. Welcome DC322. Gadot. Always a pleasure to see you. TK Porsche is here. NMB 45. Always a pleasure. Hopefully you're well. This is Trump Tower right here. We're looking at it. Pretty good view of it. In the distance, you see Central Park Tower. But this is my office across the street. This is one of the main headquarters for Douglas Elliman, 575 Madison Avenue. We have a beautiful office here, and we also have spectacular views of 432 Park Avenue, which is one of the tallest and most desirable buildings here on New York City's Billionaires Row. Sean Haggard, what's going on? Kyle Lacey is here. 16. JK. T-Ding 35, I am here, is here as well. Tug Carter, Sally, Patriots NFL 1, what's going on? Now, you know what? Before we dive right in and start to talk about, the financial markets and all that good stuff, let's have some fun. Let's speculate on what's going on here in the United States, shall we? Now, chances are if you had, let's say, AT&T or T-Mobile today, there was a massive outage, right? A massive outage. I couldn't get in contact with clients. Clients couldn't get in contact with me. I couldn't get in contact with my boss. It was wild, and there was a huge outage apparently. Now, I've been reading multiple things, but I want to know your take on this. The FBI is now investigating if this is a potential cybersecurity attack, on the U.S. Infrastructure and potentially the power grid. I don't know what's going on. But then I also read an article coming from NASA saying that there's solar flares that could have potentially disrupted some of our cellular technology. So I guess a few questions for the group here. Number one, was anybody here impacted by the outages at AT&T today? And if so, are you guys good? I mean, is everything back in working order? I mean, I was pretty much unaffected because I had Verizon and I was here in Midtown Manhattan, and pretty much I was fine. But I'm curious to see what you guys have to say. Alan says, Tom, I'm unsure how reliable, but supposedly it was just a botched software update. Really? Oh, jeez. Crazy. Sunshine After Rain says, yes, here in New Mexico. Christina G says, yes, I was. Bree Graham says, cyber attack, ? Wow, so many people are saying it was just a software failure. That's probably what it was. I don't know. There's a lot of speculation. Some of the conspiracy theorists like to go crazy with stuff, but I don't know. Wow, Crypto Meme says, yes, our website host went down. Interesting. I don't know. A lot of people here in the city that had AT&T were complaining for sure. Patriots NFL 1 says in Boston, Verizon had no problems. Well, that's good. Let's just cross the street here. Elle says it was definitely a cyber attack. I don't know. I guess we'll wait until it comes out. We'll see. This is the corner of East 56th Street. This is 425 Park Avenue. Look at that. This is one of the newest Class A office towers in New York City right here. Oh yeah, 35 is guaranteed. Verizon got some new customers today. I was unaffected. I had zero problem. James Hall says I have T-Mobile and I had no problem as well. Interesting. Yeah, I guess we'll see. But let's head down Billionaires Row. We'll do the classic route tonight. I got to stay local because I got to get back to the office tonight, get some stuff done. Joe says solar flares affect satellites for almost 20 years now. Yeah, but, and I was reading we're in like a different solar cycle now, so these solar flares are going to be a little bit more powerful. Again, I don't know what I'm talking about in terms of this stuff. I'm just reading what I see online. So anyway, but yeah, I mean, talk about a powerful market. We quite literally had maybe 3 or 4 days of a correction. We had some stocks pull back, and now after that extremely encouraging earnings report from Nvidia, right, not only beating on the top and the bottom line, but also raising that forward guidance. I mean, the market was really off to the races, and that lifted, sort of a rising tide lifts all boats. Pretty much how that went down today. S&P 500, brand new all-time record highs, upsetting some of the bears on Wall Street significantly. This is a cool view here in the city. You're looking directly down New York City's Billionaires Row. You have the Steinway Tower. You have Central Park Tower as well. Andy, what's up? Says don't go back to the office, take the night off. I wish. I got to get deals done. Deals need to be done, man. Yeah. Looks like the work crews are working on something over here. Look at that. Well, look, that's very true bull market action, right? What I like to attest that to is an analogy that I call basketball underwater. And I've written about this multiple times in our newsletter, the Behind the Street newsletter. In very, very strong bull markets, usually the leaders or the TMLs, they'll go through corrections, right? Stocks don't always go up in a straight line. They'll pull back maybe 2, 3, 4 days, 5 days, test major moving averages. If it's a really strong market, they'll probably test the 21 day, but then they rip right back up. It's kind of like if you ever, went swimming in a swimming pool and you took like a beach ball, right? And you held it underwater. Once you let that beach ball go, that thing is going to shoot right back up out of the water, right? So that's kind of how I use that analogy. And this always happens in very, very strong bull markets. And there's a lot of bears still on Wall Street, that have really missed this entire rally and are still calling for, this market is, they're still saying that this market is in a bear market, right? And this is just a bear market rally. I mean, guys, you don't have, the top 10 stocks in the S&P, right? You don't have your true market leaders, blowing out earnings, net income or profitability up 800%, and 3 consecutive beat and raise quarters, and stocks levitating up again 16%. That doesn't happen in bear markets, okay? Bear market stocks will gap up on the open and sell off throughout the day. They gap up on the open and sell off throughout the day. This is about as strong of a market as I've really ever seen. It's actually surprising me quite a lot. It's surprising me. And what's encouraging is the cooperation from other emerging markets, particularly over in Asia, right? And I could be wrong on this, right? And I know I've kind of been pounding the table, like almost kind of being annoying, but I don't know. I think a lot of people are underestimating this potential move in Japan. I mean, this could be like the trade of the century. Japan coming out of a multi-decade base. You know, Japan hasn't seen all-time record highs in their stock market since before I was born. I wasn't even on this earth when the Nikkei 225 hit an all-time record high. I wasn't even born. I wasn't even alive. So yesterday, we just hit a fresh, brand new all-time record high for the first time since 1989 in Japan. And today we followed through, breaking out again. You know, there's an old saying on Wall Street, the bigger the base, the higher in space. And you also, not to just talk about technicals, you also have all of the fundamental factors that are lining up to support this move, right? Number one, all of the manufacturing capacity has essentially been ripped away or is in process of being ripped away from China, right? Because after the Big C took everybody out and destroyed global supply chains, nobody's trusting them anymore. So all of that manufacturing capacity is going to Japan, all that manufacturing capacity is going to India, it's going to Korea, and it's coming back here to North America. Our good friends in Mexico and Canada are going to benefit from that too. So those indices are ripping, right? I mean, follow the price action. It's kind of like what Paul Tudor Jones says, right? Paul Tudor Jones says, follow the price and look for the news that corroborates the price. And India, if you look at the Nifty 50, that has been as strong as it's ever been. So this is really interesting times in the really global scale of the financial markets. It's really, really interesting times. And I'm glad we're able to cover it live here on the stream. Oh, look at this. I think this may be Trump. Guys, we may catch the president right here. This may be him. I don't know if it is. Let's see. I don't even know if Trump is in New York. Maybe he was for a court case, I remember. Well, that's Trump Tower right here. Or maybe this was just yeah, it probably wasn't him. Anyway. Hey, Kyle Lacey says the trend is your friend. Neo says if the stock market wasn't rigged, it would have collapsed a long time ago. Interesting. What do you mean by that? What do you mean by rigged? If you could explain your point. Hey, SBK Pilots is also the S&P 500 equal weight is hardly up for the year. So the lack of breadth is concerning. Breadth is actually broadening out quite a bit. But I do understand your point. But breadth has been broadening out. It's just that I believe we are in an age where the bigger companies are going to continue to get bigger, and the earnings power is going to be concentrated at the few, right? And I really believe we have the Federal Reserve to thank for that. You know, if you look at a company like Microsoft, if you look at a company, I mean, just any of these massive mega cap tech companies, they have more money than God, so to speak. So they can not only buy out their competition, but they could spend a lot of money on R&D. And it's as if the bigger companies are getting bigger and more powerful by the moment. Now, is that a good thing or a bad thing? I don't know. Ozzy says it's rigged, as in they can drop or raise the market at will. Says Ozzy. Interesting. What do you mean by that? What do you mean they? Who's they? I don't understand that. I would love to understand. Hey, Robert Parker says, hey Tom. Good to see you. What's up, Robert? Thanks for joining us. Neighbor Bob says you only profit when you sell. Not necessarily, right? You know, it's interesting. I'll tell you a cool story of a deal I'm working, right? And I've really been exposed to more of these interesting type deals since I've been working on higher ticket price deals. A lot of times, you know, extremely wealthy individuals like never sell anything. What they'll do is they'll use their assets as collateral to go acquire other assets. So I'm working on this deal with a buyer right now. She has the money to pay all cash for this property, but she doesn't want to. What she's trying to structure is having a bank or an institution lend against her equities, her mutual funds, her other properties that she owns, because she doesn't want to sell, because when you sell, it's a big taxable event. And you know, she's worth multi deca millions, and it's a crazy deal, because you may be thinking, well, why doesn't she just get a 30-year fixed? Well, she doesn't have the W-2 income to support that, so pretty much this particular client is illiquid, but she wants to have an institution lend against her assets and use her assets as collateral. So it's interesting. Anyway, everybody, this is the Plaza Hotel right here. Look at that. The beautiful plaza. One of my favorite buildings in terms of its architectural characteristics here in New York City. But speaking of the markets, I want to point out the Sherry Netherland Hotel for all those new viewers here. Now, we talk about, you know, trading in the financial markets a lot, and one of the greatest stock market operators of all time was Jesse Livermore. And back in the day, he would go down and trade stocks at the bucket shops down on Wall Street, and then he would come up and have a drink in the hotel bar at the Sherry Netherland right here. A really good book is called Reminiscences of a Stock Operator. It's based on the life of Jesse Livermore. And rumor has it is, if you want to, well, before you can start at Tudor Investments, which is Paul Tudor Jones' sort of family office / hedge fund, you need to read Reminiscences of a Stock Operator, based on the life of Jesse Livermore. Kind of cool. But on Thanksgiving, one year, he took his life in the cloakroom at the Sherry Netherland. I want to point out a few things here. Now, you have the entrance to the hotel right here. So this is the main hotel entrance at the Plaza Hotel. And on the other side, the Central Park South side, I should say, is the entrance if you actually own a condo or you rent at the Plaza Hotel, which is pretty cool. A lot of people don't know that, but if you're ever staying at the Plaza, you come in on the side entrance here. This will take you inside the hotel. And if you enjoyed your stay so much, you could actually talk to an agent to purchase a unit inside the Plaza. Kind of cool. So right along Central Park South, the address is 1 Central Park South. You have the entrance to the residences. And I love this kind of picture here with all these old lamps, the really nice red carpet. And then this is where all the black cars come up to drop off the residence. It's really nice. It's a very iconic shot. You know, walking up and down Central Park South. Looks quite nice. Hey, JC, good to see you. Thanks so much for joining us. This is a little bit better visual. So you can see residences only, 1 Central Park South. Check out the details on this though, guys. Really beautiful, right? Neighbor Bob says, any thoughts on Penn Entertainment just hit a 52-week low. I don't cover gambling stocks. I really only cover enterprise software. That's kind of my wheelhouse. I don't have any expertise in like online sports betting, gambling, and even if I did, I'd never invest in it. It just doesn't align with my values. I'm not saying that, you know, anybody else can't invest in it. That's just me personally. I'm just not for any of that stuff. But isn't that, it's like so stunning here, just the detail of everything, you know, the moldings from the lights to the crown moldings on the ceiling. It's awesome. I'm not sure if you guys remember this, but we actually did a walking tour inside the plaza during the holidays, and the lobby of the Plaza Hotel right around Christmas time is really beautiful. They have it all decorated for the holidays. It's really nice. I'm gonna try to do a standalone video of a walking tour of the inside of the plaza, just because they really don't like filming too much. So if it's really busy, they'll kind of run you out of there. But hey, Lena Sandoval, thanks so much for joining us. It's good to see you as we walk down Central Park South. Thank you so much. Hey, Sharon, this is Evening Tom and happy Thursday. What's up? NBA Elias, greetings. Good to see you, NBA Elias. Mark says, what does one of those units go for? It depends. It really depends on the size. But I would say pretty much everything, you probably can't find anything below 5 million in there. Your common charges are going to be really high. That's one thing you got to watch out for in a lot of those older buildings. Common charges will be high. Sarah Beth. So this door right up here, I'm going to show you guys. This is 50 Central Park South. This is the Ritz-Carlton Central Park. And there's two distinct entrances, which I'll point out here in a moment. Number one right here, and number two where it says 50. But this entrance is temporarily down. I think they're doing some renovations, but if you look up 50 Central Park South, there was an amazing listing here that I believe recently sold for like 16,500,000. And you have all the amenities of the Ritz-Carlton, New York in your building. And you're right at one of the main entrances of Central Park. Pretty cool, right? Personally, this is my favorite entrance to the park, right here on Avenue of the Americas in Central Park South. Really nice. And this is my old building right here. Not the super tall one all the way up there. This Art Deco style building. This is 106 Central Park South. For anybody looking for something at reasonable price points on Central Park South, and if you don't need like crazy views of the park, 106 Central Park South is a very good building. The staff there is fantastic. They always keep it immaculate, and it's totally white glove service, the entire building. It's amazing. I had a really good time living here at 106 Central Park South. It was great. You have good views of Central Park. You can see the Deutsche Bank Towers, 1 Central Park South right in the distance. And then you can see all of the east side of Manhattan. It's pretty cool. Before we walk all the way down, let's go a few more blocks this way. Mainly because I want to show you all this building right here. This super tall building is 53 West 53rd Street. Now, technically it's not on New York City's Billionaires Row, because Billionaires Row is 57th Street, but it is one of the Billionaires Row style buildings, right? Ultra luxury, You have these amazing amenities. You have a private restaurant in the building. You have saltwater swimming pool. And you have unobstructed views of Central Park above the 50th floor, which is awesome. Carlos says, Tom, when you pretend to go to Miami again? We're going to pretend to go there March 1st. So we will be down there March 1st. Now this is a good shot. You see Extel's Central Park Tower in 157. Now there's one sponsor unit left in the building. It's 32D. It's 1 bedroom, 1.5 bathrooms. It's the only sponsor unit left at 157. And then they will have a complete sellout. Now there's a lot of resales in the building, but I will be posting the video of the final sponsor unit at 157 shortly. I think maybe Thursday. Hey John, what's up? Says, what's a good app or online service for stock trading? I really wouldn't recommend any, to be honest. Really wouldn't recommend any. I think you need to find a real broker dealer. You need to find a reputable broker dealer. I would stay away from, you know, the Robin Hoods, the Acorns. I think those things are really risky to keep a significant amount of money. You know, you want to go to a real institution, right, that has a reputable track record and a very, very high AUM. Hey, Tom AK. What's up, Tom? Now, you know what? I'm actually really excited about this restaurant. Hold on, let me walk to the corner so you can see it. Now, this is New York City's Billionaires Row. You're going to start to see a lot more pedestrian traffic here. And for some context, that is 432 Park Avenue. So this is where we started the stream, all the way over there. And we've now come a little bit further east, or I should say west, excuse me. You got this big Cadillac Escalade blocking the bike lane. That's not good. But I'm really excited about this restaurant that recently moved in, I think like a week ago, to the corner of 6th Avenue or Avenue of the Americas and 57th Street. And the reason why I'm excited about it is because there was another restaurant here and it closed down due to COVID, right? So this was kind of like a ratty area. It really didn't fit the neighborhood well. I mean, this is Billionaires Row, and there used to be a lot of, you know, homelessness right on this corner. It was just not a good look. And now it's like a really nice restaurant. They have this beautiful bar that is showcased in the windows. Look at that, pretty cool. Let's check out what they got on the menu. Doesn't look like they have a solid menu here. They're just kind of telling you what it's about. But anyway. Tom AK says get out of the bike lane. All right, let's go back in the bike lane here for a moment, just to kind of figure out where we got to go. Hey, SoCal Lawrence, it's good to see you. Thanks so much for joining us. TCALS is the S&P 500 index. ETF is fine too. Vanguard's VOO. Yeah, that's the ticker symbol to the ETF of the S&P 500. And Vanguard's a great custodian, right? They have trillions of dollars under management, also Fidelity, right? Now, an interesting book, a great book that I always recommend to everybody is the following. And it was actually written by the founder and CEO of Vanguard. Unfortunately, he did pass away. The book is called The Little Book of Common Sense Investing. It's a fantastic book. You could probably get it off of Amazon for, I don't know, like 15 bucks. So The Little Book of Common Sense Investing by Jack Bogle or John Bogle, which is great. Now, Bogle really revolutionized Wall Street, kind of. Honestly, he did. The mutual fund industry on Wall Street is definitely not super thrilled with John Bogle or Jack Bogle, mainly because he is responsible for driving fee income down on Wall Street. Now, back in the day, right in the 80s and things like that, if you wanted to purchase a mutual fund, you probably had to pay a 5% front-end load fee. There were most likely 2% annual management fees. And then if you wanted to sell out of your mutual fund, they would also charge you a 5% back-end load fee. So many ridiculous fees for these mutual funds to underperform the market. So the idea that Jack Bogle kind of came up with is, you know, what if we can create a product that the vast majority of Americans can purchase, where they would get the lion's share of the return of the US economy, right? The top 500 companies in the United States, where they could just purchase a little piece of America and they could keep that and hold it forever. And that would kind of be their retirement, with very, very low management fees or expense ratios. And that's kind of why, you know, fees on Wall Street, commissions on Wall Street are relatively almost negligible at this point. I believe even some Fidelity products out there have, what's it called? Zero expense ratio products. So you could buy an S&P 500 index fund and not pay any money at all, which is cool. This is the Russian tea room right here. And here's a shot of 220 Central Park South, as well as Central Park Tower. Pretty cool. Now, if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams almost every single day starting at 8:30 p.m. And if you'd like the commentary that you're hearing, conversations about the financial markets, we do write a free investing newsletter that we send out every other Thursday, right as the market closes. If you want to sign up for that, you could scan the QR code on your screen and punch in your email, and you will access our Substack, where we publish 2 times a month. We talk about the US equity market, fixed income, emerging markets. We do breakdowns of corporate earnings and much, much more. So feel free to head over there and join us at the Behind the Street newsletter by scanning the QR code on your screen. So we're at Carnegie Hall now. This is one of the most famous, I should say, musical venues in the world. And there appears to be a big, maybe show or something coming out of here right now. Hey, Penelope, what's going on? John Kelly, what's up? Patriots NFL 1. This is Tom is the greatest ambassador to New York City. The Chamber of Congress should pay us. I'm open to that if they want to cut a check. I would gladly accept. Oh, Sam Banks, very cool. Okay. I like watching everybody try to get taxis coming out of Carnegie Hall. Let's head down a little bit. Everclear says, how does Fidelity make any money with the 0% expense ratio? They probably make some money on like a spread. Kind of like perhaps how, you know, Robinhood's whole thing is with commissions, zero commissions. A lot of people think, oh, I'm trading with Robinhood because they don't charge me anything. They do charge you things, but it's just hidden to the consumer. Right? It's called payment for order flow. Nothing is free in life. But I would also argue that payment for order flow is a very good thing. You know, it's if you like paying $0 on the buy and sell, and if you like the overall narrative that commissions and fees are going down on Wall Street, it's mainly due to payment for order flow. But there's a lot of people who don't understand the market that complain about it and say, you know, the market's rigged because Citadel is ripping us off. Citadel is making money, okay, by scraping maybe a couple pennies from you on the bid. The reason why you're not making money in the stock market is not because Citadel, you know, is executing your order maybe like a penny more than what it should be executed for, right? That's not the reason why, you know, you lost 60 grand in the market, is because, you know, of payment for order flow. You didn't get your bid hit like a couple pennies off. But yeah, I believe we actually wrote an entire article on what payment for order flow is, how it got its start, things like that. Okay, everybody, this is the 57th Street subway station. You can get the N, Q, R, and W trains here. It's a pretty cool block. Lots of traffic here tonight as we start to head towards Times Square. Oh, cool. Jimmy B says, I trade Interactive Brokers. That's a good broker dealer too. I use Interactive Brokers as well. All right, let's wait for the light here. We'll try to get away from that guy who's having a little bit of an outburst. Now, I didn't get a chance to check where gold is trading today. Are we still above $2,000 an ounce on gold? What do you guys think? Where are we headed for the behemoth gold? It seems like that thing just won't break out for the life of it. I mean, it's been coming out of this massive base, right? As we talk about, you know, these things building monster bases, we've been talking about Japan. But also another like monster base has been in gold, right? We can't deny that. It's been about a decade long base in gold, and it's just trying to come out into new high territory. It is trading above $2,000 an ounce, but it seems like something's keeping that thing down. It just will not break out. So I haven't been involved. Dan Sang, what's up? Says gold is currently 2,033 for 2034. Copy that. Got it. Okay. This is Ray's Pizza. This is one of the most overpriced kind of pizza places around. There's so many better spots in New York. My favorite spot is Made in New York Pizza. The place is fantastic. And you'll never really have a line either. So it's good. Very, very seldom I've ever waited in line. Yeah, John Sunderland's. The dollar has been going up as well. I've been watching that, which is a little interesting, right? Because usually, right, not all the time, but usually a stronger dollar is stock market negative. And the Dixie has been rallying over the past 3 months. We've had a big bid in the Dixie. And the Dixie is an index that tracks the relative strength of the US dollar against a basket of foreign currencies. This is Barclays Investment Bank. That used to be the old location of Lehman Brothers, by the way. And this is BNP Paribas, right here. Hey Peter, what's up? Thanks for joining us. It's kind of like what Paul Tudor Jones said. It's an interesting quote, I always remember it. He's like, gold is great, but Bitcoin is the fastest horse in the race, right? So if you want to try to put on a position and get some alpha, right, obviously higher risk, higher reward. But Bitcoin has done very, very well. You know, it's held over 50,000. So gold is great, but the fastest horse in the race is Bitcoin. Hey, DJ Chris says, hey there, what's up, Chris? Good to see you. We're now on West 52nd Street. Kind of right here on Times Square North. Start to head down. Let's go over near Rockefeller Center tonight. We haven't been there in a while. Hey, CPQ, Tom, what do you think about Capital One and Discover deal? I mean, I think it's all right. I think it's good. But there's been a lot of politicians that are venomously against the deal. Right, one of which being Elizabeth Warren. She has definitely have come out on multiple occasions kind of condemning the deal and saying it's going to be horrible for consumers. But look, I think we need to kind of come to terms with the fact that the banking sector as a whole, right, not to sort of deviate too much from the Discover topic and that Discover deal, but what I believe, and I may not be right, I may be wrong, I think you're going to have further consolidation in the banking sector in the United States, which is not necessarily a good thing, by the way, right, as we're sitting here looking at Times Square. It's concerning because it's important to have a very robust regional banking sector, in my view, because if you just have a handful of select mega banks, it's impossible to kind of understand the needs and service customers that may live in flyover states, rural America. If you just have, a handful of large behemoth banks that are based in the coastal elites. It's important to have a very, very robust and healthy regional banking sector that services, SMBs, small to medium-sized business clients and the like. However, as you've been seeing, this isn't a new trend. You're seeing the bigger banks get bigger and bigger and bigger, and you're seeing more and more smaller banks go out of business and face financial troubles. And whenever they face financial troubles, they get clobbered up by the bigger guys. So I'm not too sure what the banking system is really going to look like in the next 20 years. Maybe we have a whole new kind of revolutionized banking system. Or maybe the banking system looks a lot different, where everything is, a little bit more decentralized, perhaps. Because at the rate it's going now, and I think we could all agree, at the rate things are going now, it's just going to be JP Morgan Chase and a few other big players, right? I mean, it's going to be Jamie Dimon controlling everything. So Justin Goins says Bitcoin is a jockey-less horse. It has no direction and it will never find the finish line. Maybe. Yeah, I mean, I think Bitcoin's a really controversial topic. I own it. I'm long. I've been long for a while. And I think it's going to continue to make a very, very significant part of my portfolio for sure. I know. Dewey says Canada has 5 big banks. It's a problem, right? I see it as a problem. How do you guys think we overcome that and kind of fix that, by the way? I think central banking has a lot to do with that. This is Juniors. I believe the original Juniors location is actually in Brooklyn, New York, very close to the one and only Atlantic Terminal Brooklyn, kind of where the Barclays Center is. Yeah, Jeff W277, like JP Morgan Chase and Bank of America. Jamie Dimon and Brian Moynihan will be running the entire financial system sooner or later. Hey, Melissa 2087, what's up? Good to see you. Speaking of big bank consolidation, we've actually just had a major consolidation event due to the big banking crisis of Silicon Valley Bank. It's so crazy. Like, does anybody else feel that time is all but an illusion after the pandemic? I kind of feel that way. I feel like time is just kind of morphed into one after the pandemic. Silicon Valley Bank collapse was only a few years ago, right? And that whole craze sparked massive consolidation and contagion. Well, it first sparked contagion, and then it sparked major consolidation in the financial world, right? Now we don't have Credit Suisse anymore. Credit Suisse is gone. That is now part of UBS. And many, many more. Now, I want to quickly pause. Right here is the site of the old Lehman Brothers. This is now Barclays, right? Talking about bank consolidation, banks going bust. When Lehman Brothers went bust, part of the deal is that Barclays would take over here. So if you ever watched one of those documentaries on the Great Financial Crisis, a lot of that film was right here, right? A lot of that film of bankers coming out of their offices with cardboard boxes. It was all filmed right here, right? Now, the problem with Silicon Valley Bank, and we've kind of explained this before, it was really just very, very poor risk management, right? They had so much concentration in duration, right? They didn't really account for any duration risk in their bond portfolio because, and I can quickly explain kind of what happened if I may. It was a classic bank run scenario, and if you go all the way back, it was, not to point any fingers, but we can kind of blame this one on the Federal Reserve too, because after the pandemic, the Federal Reserve had to get very, very accommodative, and they had to flood the system with money. They had to drop interest rates to near zero, print a bunch of money, and we also had a bunch of fiscal stimulus too. So we had both fiscal and monetary stimulus all in one. And that liquidity spurred a huge bull market in private equity and venture capital. So you had all of this liquidity and money on the sidelines flooding into venture capital. Now, when you think of venture capital and you think of banking, what do you guys think of? Right, obviously, you think of Silicon Valley Bank. All the big VCs that invest in these early stage companies use Silicon Valley Bank. So you had a massive wave of money flowing into Silicon Valley Bank. Now, what many people don't realize, you may think, oh wow, this bank is taking in so much money. This is really good news. Look at all those new assets. No. When somebody deposits money, right, when you deposit money in a bank, that's a liability to the bank because the bank is now liable to return the money to you. So when you go to the bank, when you go to Chase, right, when you go to JP Morgan Chase and you deposit, $100, that's a liability to the bank. So the bank has to find something to do with that, right? They have to find a way to make yield on it. They have to find a way to loan it out. So what they did, they actually weren't being malicious here. They just put it in very, very safe mortgage-backed securities that are backed by the government. The problem is they plowed about $70 billion into long-duration mortgage-backed securities when interest rates were at all-time record lows, right? Think about what people were getting 30-year fixed-rate mortgages for in 2021. So as we've reviewed multiple times, right, the bond market, there's an inverse correlation in the bond market. So when bonds sell off, yields go up. So when you had that massive sell-off in the bond market, when you had the Federal Reserve raising interest rates, the value of all of the mortgage-backed securities in their MBS portfolio were cut in half as rates went skyward. So very, very smart investors saw this, right? One of which being Peter Thiel. And he's like, oh my God, the mark-to-market losses at Silicon Valley Bank on their bond portfolio is massive. I'm gonna pull my money out. And when one person pulled their money out, particularly if it's Peter Thiel, everybody's like, whoa, I gotta run for the fences too. I gotta run for the hills as well. And that caused a cascade of panic that caused massive, massive withdrawals at Silicon Valley Bank. And the only way, right, again, going back to what we explained, that bank deposits are liabilities, because you're liable, the bank is liable to give it back to you. The only way that Silicon Valley Bank could have returned money to customers is to sell assets. But the problem is, as we've reviewed, those assets were now worth 40 cents on the dollar, 30 cents on the dollar. So it went bust. So it's interesting, right? And again, this is why I say, having long durations of artificially suppressed rates does untold things to the economy, many times in ways that you would never even really think about and expect. Because at the end of the day, Silicon Valley Bank wasn't speculating in, subprime, toxic derivative assets. They were just buying mortgage-backed securities that were safe. But again, the valuation of that cratered as interest rates went up. So anyway, now we're in the New York City's Diamond District. Here we are, right here on West 47th Street. Now let's cut back over to the east side because I do have to go back to the office. This is 270 Park Avenue right here. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams almost every single day starting at 8:30. And if you like the financial talk, you could also sign up for our free investing newsletter by scanning the QR code on your screen and punching in your email. We send it out every other Thursday right as the market closes, and we just sent out the newsletter last Thursday. So it's a great free way to support the stream and stay up to date on the financial markets. So you can feel free to do that by scanning the QR code on your screen. Let's check the spot price of gold, might as well, since we're here in the Diamond District. The bullion exchange should be up here. Hey, Justin says, do you do these kind of streams on the weekend as well? Yeah, we usually, if there's not like a big thing I gotta be at, we'll do this every day, starting at 8:30. We usually go for 2 hours. Hopefully tomorrow we go to Tribeca. Haven't been to Tribeca in a while, so. It's funny because the Diamond District is so dead at night, but during the day, this is probably one of the busiest streets in Midtown. But for obvious reasons, right? Everything is all boarded up and shuttered at night to prevent theft. But you can see there's a lot of these booths here. This will all be absolutely crowded, packed, people doing commerce. It's cool to be able to see it in person. If you're visiting New York City, you should definitely check out the Diamond District. You can see all the different trading companies, all the different jewelers here. It's cool to see. Look at this. No ski masks allowed in New York City's Diamond District. Now, I made a joke to one of my friends that now that the pandemic's over, chances are, if you're on the New York City subway and you're under the age of 30 and you're wearing a mask, you're probably just a criminal. You're not scared of catching COVID. You're just a criminal. And I was like, dude, that's so true. If you're under the age of 30 years old, if you walk into a store in New York City or you walk into the subway in New York City and you're wearing a ski mask or a COVID mask, you're just using that really as an excuse. 9 times out of 10, probably a criminal. All right, let's see what the prices are here. You got palladium, platinum, gold is at $2,025 an ounce. Silver, $22 an ounce. Look at Bitcoin, 51,000 on the BTC. NASDAQ futures are up 21 points. S&P 500 E-mini futures are up 7 points, 5,088. Pretty cool, right? I think we got some water on the lens. Let me see if I can get that off here. Someone says, can you comment on the FDIC? Well, I think they insure up to $250,000, right? Now, the thing is, people will say, you shouldn't keep more than $250,000 in a bank account. It's your own fault. I don't agree with that statement. actually. And that may be surprising to a lot of people because I am a very, very much a, sort of laissez-faire free market capitalist. But the U.S. economy is so massive, okay? And it's so much more massive than when we created all of the FDIC rules, regulations, and laws. You got to increase that. You have to increase the insured rate on the FDIC from $250,000. I mean, if anybody here is running a business, okay, small to medium-sized business, large business, you're going to have more than a quarter $250,000 in a bank account. So, yeah, that's the one thing that we and I don't know the answer, by the way. I don't know what the answer is, how we do that. But I think those levels need to be increased, in my view. Someone says, where is Trax NYC? I think he's right here. We just passed it right here to the left. Trax NYC right here in the Diamond District. I know Patriots, NFL says just use a bank that's too big to fail. There are 5 of them at least. Yeah, and see, and that's kind of where it's such an interesting conversation because that's where it takes us, right? I'm assuming not everybody wants to have 5 big banks, but now everybody's so freaked out about putting their money at a regional bank because they don't want to lose their money. And I get it. So, all right, this is West 48th Street, headed north now. Hey, Joel PM. So speaking of MBS, Ackman is launching his own hedge fund, open to all investors, low 2% management fee. I did not hear about that. Can you send a link in the chat? Now, Bill Ackman did a great interview with Lex Friedman the other day. I know, John says, when are they going to take the scaffolding down, right? Yeah, David says you tag beneficiaries to the account. Each person it increases $250K. Yeah, I mean, even still though, right? I mean, if you're running any sizable business, you're going to have a lot more flowing through that. But I get it. It's, I just think it needs to be relooked at. Or, just have better risk management at some of these big banks. They plowed all of that money into long duration debt. Hey, Go for Hokies, what's up? Welcome to New York City. We are here on 5th Avenue, West 49th Street, and we're about to see St. Patrick's Cathedral. Oh, by the way, last announcement here. If you guys want to check out a really interesting listing that we have, it's an unbelievable triplex apartment here in Manhattan. It's in the East Village. I just uploaded the property tour here to YouTube. Let me know what you guys think. If you type !tour, T-O-U-R in the chat. Again, !tour, T-O-U-R in the chat. It's going to drop the link to the triplex listing we have. And let me know what you guys think. It's an interesting property. It's over 3,000 square feet. It's priced just under $4.5 million. I'm curious to see your thoughts. Curious to see your thoughts on it. We're now at Rockefeller Center. This is 30 Rock. This is the very famous Saks Fifth Avenue right here. Hey, Tatted Towers, that place was amazing. I'm glad you liked it. It's an interesting style. I think it's going to take a very, very specific buyer for that property, for sure. Oh, we still got people ice skating. Cool. This is the rink at Rockefeller Center. Let's see how crowded it is. All right. There's actually quite a few people still ice skating at Rockefeller Center. Peter says, I saw it and I liked it. I enjoyed the numerous outdoor spaces. It's interesting to see Rockefeller Center now and compare it to when the holidays were here. The amount of tourism in New York City was insane this holiday season. Grazzi's Botanica, outside, inside space. The designer is great. Thank you for that. Appreciate it. Abdullah says you liked it. Thank you. John says, Tom, I was just in Paris. 60 degrees over there. Flowers are all coming up. Wow, that's awesome. Hopefully we'll get an early spring here. That would be ideal if we get a early spring in New York City. I'm kind of sick of the winter. It's warming up a little bit now. It's going to be 50 degrees this weekend. Make a left here and continue to walk up Fifth Avenue. So I know I asked this at the very beginning of the live stream, but now that we have a lot more people in the chat, did anybody experience any of the crazy internet outages from today? Particularly if you were an AT&T customer. Apparently there was, and still, massive internet outages all over the United States, concentrated to AT&T customers. Right here at St. Patrick's Cathedral. Hey, NBA Elias, Tom, tour of the condo is awesome. The lighting jumps out and the outdoor spaces are great. Should sell quick, hopefully. Yeah, I mean, if we could move that thing, that would be great. Fingers crossed. Go for Hokie says my T-Mobile had no issues. It seems we're getting a lot of yeses though in the chat. Mary says yes, and I have AT&T. Kelly says the outage lasted only 4 hours. Wow. Yeah, there was a lot of speculation if it was a cyber attack or something, but maybe it's just like a normal outage. Ancient One, and I heard that too. I heard that there were a lot of very powerful solar flares. I read an article from NASA today. This is the old Versace store. Which is now the Eden Fine Art Gallery. But it looks like the Eden Fine Art Gallery actually vacated. This is now vacant once again. This is totally vacant here. Hey, Diamond Dave, what's up? Thanks for joining us. Sean says yes, AT&T here in Florida has been acting up. Yeah, this place is vacant again. It's crazy. This is prime real estate here. I'm concerned about the rental market in New York City over the next coming years. One of the things I was doing at the office today is looking at the pipeline for new development rentals. So new development that's going to be used as rentals in the city. There's almost none. Like a shockingly amount of like donut, zero. Which is very concerning. Oh, looks like the rain is starting. Good thing I brought the umbrella. So what you have in New York City is the lion's share of the new development is being used for sales, right? Not enough pipeline of building rentals. And a lot of the rentals in New York City are falling into disrepair, especially the older buildings, because a lot of these landlords are not making enough money to keep up on the maintenance, which is pretty scary. I mean, even just recently in the news, there's been, mainly in the boroughs, there's been incidences of these buildings just collapsing, like these whole apartment buildings just crumbling and falling apart. So we need new rental product coming to market, or you're going to continue to see these rents go skyward. It's very, very concerning. Oh wow, Cynthia Ava says, I just checked out the apartment tour, a very stunning place. I used to live in the East Village. Very cool. How'd you like the East Village? I'd say it's a very fun place, but definitely not for everybody. But East Village, very, very fun place. Hey, Hang with Mark Mom, what's up? Good to see you. Thanks for joining us. Now, Hang with Mark Mom, one of the things we were talking about tonight, which I believe is one of the most important trends that anybody involved in the financial market should be paying attention to right now, and that is the brand new all-time record high in Japan. So I'd like to know your thoughts, right? You're an ex-Wall Street titan down here in Lower Manhattan. I think this could be the start of a massive monster move in Japanese equities. And I was searching through some of the headlines and hardly anybody's talking about it, right? I was turning on CNBC. There's maybe like a few Bloomberg articles, but you know, something like that should be plastered on the front page. You know, it should be plastered on the front page of the Wall Street Journal. And that means I think a lot of people are underexposed. I think this is a pretty interesting asymmetric trade here. Now, I'm not telling anybody to do anything, but you know, maybe it's time to get long Japan in a big way. We wrote about this, and you know, in next Thursday's newsletter, I'm going to continue to lay out the bull thesis in Asia, specifically Japan, Korea, India, because I just think it's such a big trade. big potential trade, because there's never been this massive seismic shift in the manufacturing sector of the global economy before, right? You are going to see a monster shift, the likes of nobody's ever seen. So if you want to read that, I'm going to be doing a more in-depth post talking about Japan, Japanese equities. We're going to talk about Korea a little bit, and this is the Jeffries building, by the way, and India. We're going to send that out next Thursday. If you want to get it, if you scan the QR code on your screen and punch in your email, you'll be signed up for our free investing newsletter, Behind the Street. And I think I'm going to lay out an interesting, compelling case. And I'm very curious of what the feedback is going to be. Look at the interior here. Very cool. I always like the Jeffries building on Madison. Hey Adrian, what's up? I know, NBA Elias, this Tom, it took 34 years to reach this level. Yeah, yesterday was the first all-time record high since 1989. It's been building out a massive cup with handle base for a longer duration than I've even been on this earth. So it's definitely something to watch. As they say, the bigger the base, the higher in space. So interesting art galleries here. Hey, Patriots once. Tom, where did you go to college? I went to college right here on 59th Street at CUNY John Jay. CUNY John Jay College. Hang with Mark Moms as well, Tom. Japan is a whole new breed in terms of work culture. They are very hardworking. They do stay neutral as a country, and often quiet with their knowledge. One thing that it's most encouraging is they're starting to reform their immigration policy. Now, I'm sure everybody's heard the gloom and doom about, population collapse in some of those countries, specifically Japan and Korea. And they've mainly, historically, been very homogenous societies. If you look at a country like the United States of America, we are very, very much, super diverse, right? We're a big melting pot here in the United States. Not so much in Japan, not so much in Korea. Very, very homogenous societies. But that's changing. There's actually been laxer immigration policy, which is going to help with a lot of that, threat of population collapse, and I think propel the economy. So these are all interesting things we need to be paying attention to. This is the Ferrari showroom here. Let me just check my battery. Now I think the Formula One event is coming up in Miami, right? Isn't there some interesting race car event coming up in Miami, F1? Yeah, NBA Elias, Tom, despite the Mickey rally, Japan just entered into a recession and Germany just passed it as the world's third largest economy. Yeah, but for some reason, price is telling us that there could be a big bull market. Well, there is a bull market in Japan. But, as they say, stock market is not the economy. But it's interesting to kind of think that, right? Oh wow, Hang with Mark Moms is Tom. I have been to food events headed by the CEO from Japan. The respect is there. I'm willing to share, but not to everybody. Yeah, Hang with Mark Mom, let's connect on some stuff. Send me an email, I'd love to connect. Particularly if you're ever in Miami or New York City, let's connect on some stuff. I'd love to do some deals, maybe even. Justin says the F1 race in Miami is not till April. Copy that. Yeah, the reason why I ask about that is somebody sent me a message on Airbnb wanting to book for a few months. They said that they're going to be doing some work at the F1 event in Miami. And I'm like, F1 event in Miami? I thought that was... I feel like that just happened. I don't know. All right, let's take some cover here, and I got to plug in my phone. Oh wow, Joel PM says, Tom, restrictions have been lifted on Japan military spending. They are finally building back after World War II. Wow. Well, I'm sure some of those defense stocks will be... I know John says the last place I'd want to drive an expensive car is New York. I get it, man. Potholes everywhere. You know, mopeds driving around, people crashing into your car. I get it, trust me. Hey, Carol, what's going on? Just hey, Tom and friends. Now, speaking of Miami, Carol H is here, and I will also be in Miami the first week of March, which I'm really excited about. I have a lot of business meetings lined up, and hopefully it's really nice weather. So, yeah, Carol, we covered a few things today. We briefly touched on NVIDIA again, and then we've been mainly talking about the breaking news of brand new all-time record highs in Japanese equities. We're back at 4:32. I gotta plug in my computer here. I actually wish it were a little bit colder so it would snow. Like an opening in New York. Hey, Justin says Tom's got meetings with Dave Portnoy. No meetings with Dave. You know, it looks like a lot more lights are on at the Four Seasons New York here. Head out, but you know, I got to get back to work. I actually have to go back into the office, but if you guys enjoyed the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new here. We do these live streams every single day starting at 8:30, and we will be back tomorrow live here from Midtown Manhattan tomorrow at 8:30. If you want to sign up to receive our free investing newsletter, you can scan the QR code on the screen, punch in your email. Next week we're going to be doing a deep dive into Japan and a bull thesis on Asia in general. Last but not least, if you want to check out some of our exclusive real estate listings here in New York City, if you type !tour, T-O-U-R in the chat, once again, !tour in the chat, it'll drop the video to the most recent property tour, La Botanica, all the way down in the East Village. So guys, I gotta go back to work. I will see you all tomorrow. NAV 45, appreciate it. Fun Feeds, Carol H, Latha, SoCal Lawrence, all of our moderators. Hang with Mark Mom, I appreciate it. NBA Elias, hope you have a fantastic night. And happy early Friday to everybody. Always a bull market somewhere. You just need to know where to look. Take care, everybody.